The sentiment on the property market is horrible. People say the property cycle is over. They say the stock market correction will be very negative for real estate. I mean, that may be true in the short term, but personally, I do not believe the property cycle is over. I think a straightforward story to invest in India, it was already straightforward, remains straightforward, is anything to do with travel. But in terms of how the fund managers locally are positioning, people have been, the budget this year, I think, has been quite significant in driving market sentiment. Clearly, the budget has had the effect of causing domestic portfolios to move away from domestic investment proxies more to discretionary consumer stocks. That's the current sentiment in the market.
In terms of renewable, I do think that's a very, very long-term, powerful theme which is still running. Valuations in some cases are not sustainable, but the theme itself is very, very powerful. That we will have to invest a lot more into our own energy security, and whether it's wind or it's solar or it's nuclear, anyone who's playing into that, including the transmission players, there's very, very long room, for years ahead for money to be made over there. I would just, watch out for valuation, because again, like people take the 10-year story and then they pay up for the 10th year, immediately. That's really what one has to be cautious against.
3 to 5 years, I think even companies in quick commerce will do well.
Okay.
The second is in hospitals. Some of the hospitals can grow at that price. Pharma, I don't know, because pharma, it will totally depend on how fast our per capita income moves. If it moves from $2,500 to $5,000 in the next 5 years, there is a possibility that in pharma also you will, because Indian pharmaceutical growth, frankly, if you see, lags quite a bit. Anywhere between 8%, 10%, sometimes even 6%. So that needs to grow first. The market needs to grow, and that is where I think the opportunity lies.